Recent data suggests a revival in the European car sales. In fact, what we learned is European car sales have ended a 6-year slump and have risen by 5.7% in 2014. So let's find out if this has benefited companies which have an exposure to Europe, like Amtek Auto. John Flintham, the Senior Managing Director and CEO of the company, now joins in. Good afternoon, John, and thanks so much for taking the time out and joining us on CNBC TV 18. For your company in particular, you have presence in UK as well as in Germany, where data suggests there has been a pickup in car sales. Has there been a marked improvement in your exports to Europe?
Yeah, I think there's two aspects to this question. If you look at Europe, yeah, you're right. The overall sales for the year was very encouraging at between 5 and 6% increase, and that takes it back to about 12.5 million cars in Europe, which is a very healthy position. Spain, Italy, UK and Germany all grew in totality, and that helps Amtek in two ways. First of all, our direct exports from India have increased, and we should be reaching around about 1,000 crores for the year in direct exports, which is again encouraging and a significant upturn from last year. And then obviously our European business, which equates to about 31% of our revenues, are generated in Europe, both in Germany, UK, Italy, and some small facilities in Hungary. And of course that obviously supports the growth of Amtek going forward, so it's very encouraging.
Okay. Hi, Mr. Flintham. Thank you very much for joining us. Does this look like it will continue?
I think the general feeling is that 2015 will be a slower growth. I think there's still projected to be growth, probably in the region of between 2 and 4%, depending on who you listen to and the different experts. But I think the encouraging sign is everybody's predicting further growth, maybe not at the level there was in 2014. So I would estimate between 2 and 4% growth in 2015.
The big event on our radar, of course, this week is the quantitative easing possibly that could get announced from the ECB. How should a stock investor look at this event?
I think at the end of the day, in terms of investing in Amtek, it's really all, we're very focused into the automotive and non-auto sector in our field. So we would be looking at how that easing effect helps the European economy generally, which obviously then helps car sales, two-wheeler sales, commercial vehicle sales.
No.
Obviously there's some issues in Europe with Greece. There's also a general election coming up in the UK in May, so we'll be watching that very carefully to see what effect that may have or may not have on the general economy. But I think quantitative easing can only help the economies.
Okay. But such kind of quantitative easing could have an amplified impact on a consumer good maker like yours, which benefits from lower interest rates?
I mean, the lower interest rates really benefit extra car sales and vehicle sales. So yes, it's going to be interesting to see the forecast we give at 2 to 4% increase, of course, before any knowledge of what the ECB will do.
Okay. Your current margins are in the range of 30 to 31%. Can you tell us what the margins are in your domestic business as well as what the margins are on the export side? Which is higher?
Margins in India are significantly higher than margins of our overseas manufactured units, and that is a reflection probably of the cost of money borrowing as well, but generally margins in these areas are different. So we would be in the range of, say, 12 to 14% in our European or overseas businesses, and in the range of 25 to 30% in our India businesses. Okay. So you see a merged figure.
Okay.
I think there's one other point that I missed in terms of the market from an Amtek point of view. If you look at the top 5 customers we've got, from Maruti in India to Fiat and to Jaguar Land Rover in the UK and Volkswagen in Germany, They're three or four of our top 5 customers worldwide, and all of those customers did very well in 2014 with significant growth. So that's an encouraging sign, and hopefully they will continue within the overall market to continue to flourish.
Okay. The current contribution of exports to your revenues is 31%, as you indicated. Is the company looking to increase it further, the contribution of exports? And if yes, to how much by the end of this year?
Yeah, just to clarify your point, 31% is manufactured overseas. Our exports is has been relatively low. We've grown exports from India to our overseas companies and our overseas customers from around about 500 crores to about 1,000 crores in this year, and that's certainly accelerating. So I would expect that to jump another considerable amount in this 2015.
Okay. Well, how do you see the performance of Amtek 4 as well as Quepper in the current quarter, I mean the second half of the current year, as well as in FY16?
Yeah, I think the turnaround at Amtek 4 has been very encouraging. As I said before on this program, we've in the last year we've doubled the EBITDA from 33 million to over 65 million. In the year due to streamlining and reduction in costs and implementation of lean manufacturing. We would still see that to rise during this next financial year as we now build on the synergies of the group worldwide. In terms of Cooper, that came into the group later than Amtek 4. We're nearly halfway through the first phase of our restructuring of that business, and again that's very encouraging. We've seen an increase in EBITDA of that unit, and I think again that will be part of the overall synergy plan as we move into phase 2 of our strategy.
Okay. As rates fall in both India and Europe and commodity prices fall globally, is there more scope for margin improvement in all these, both your Indian and your European outfits?
Absolutely. Certainly the current oil price will reduce transportation costs and general manufacturing costs worldwide. So that's going to be an interesting one to follow. If that is sustained through the whole of next year, that will certainly have a benefit to us. Offset, of course, by labour increases. But overall, the material prices and commodity prices should come down during 2015. So we'll watch that with some anticipation. One
quick question, John. Your Singapore-based subsidiary in November acquired 2 Europe-based and 1 Southeast-based Asian auto as well as non-auto component player. Can you tell us, A, how much you paid for this acquisition, and how much do you think it will contribute and by when to your financials?
Yeah, as I announced in December, we bought 3 or have entered into agreements to buy 3 companies. One is an Asian, Malaysian aluminium manufacturer in the non-auto sphere, and 2 are in linked companies within our market in Germany. We're just about to close in the next few weeks on that first acquisition, and at that stage I'll release all the details. I can't release the details today, but we should be closing on the Malaysian acquisition certainly in the next 2 to 3 weeks. At that point I will get more information to you. And the 2 German companies which are into automotive machining, we should close on those certainly by February. Again, we will release all the details at the right time.
All right, Mr. Flintham, we'll touch base with you at that time. Thank you very much for joining us.